Good day, everyone, and welcome to today's trading forecast. It's your boy Anthony Phillips Njoku, aka Tony FX. And like you all know, and those that don't know me, I'm a digital trader. I trade both the financial market, the forex market, and the cryptocurrency market. I have experience in trading for 10 years now, and with the education I've gathered from different institutions in different parts of the world, like in the United States of America, in Dubai, in Canada, I've been able to use this education to trade and manage funds between the range of $5,000 to $50,000 and going up and higher. So, why am I offering this education to you? When I started off as a trader, every intention I had in mind was to really make money. But at this point in time, with the experience and the education I have had and the know-hows I have experienced, I have discovered that mainly in the market, it all has to do with the direction of price. The direction of price determines the direction of the economy, and the direction of price, which determines the direction of the economy, determines the way people react in an economy. I'll break this down much more when we dive into the oil forecast. So today we're looking at DXY. DXY. On DXY, we can see that price is in this funnel. Price is in this funnel. And if you can look at very well, we have an ascending channel. We still have the bias that price is going up higher, and DXY determines the strength of the US dollar. We had a Fed news on Friday that made this spike to drop price down to this point, saying that the Fed will have slow actions and determination of price heading into December. So investors panicked and was sold off their dollar, which made price to drop. But currently, we are looking at the most significant point that price is at this uptrend channel, and we're expecting price to continue rallying up, making dollar more stronger. The next pair on our list is the euro against the dollar. The euro against the dollar. On euro against the dollar, over here we have marked out a 4 hours order block. This is the 4 hours order block, and also a validation point. A validation point. So when the market resumes, because we expect the dollar to still regain back strength, we expect dollar to push the euro back down for dollar to be stronger against euro and make the market price to drop more on euro dollar. We can see this price break below this low, and also below this low of this engulfing candle, and also a spiritual candle, combining two red candles to form an engulfing candle. That is what we're expecting market to do. Market can go below this low, and also below this low. So I already explained why we had this spike to this up point. The Feds had a news on Friday and investors panicked, making price to jump up to this point. And from this point, we can expect price to continue going down. This is a very good entry point. Don't jump into the market as soon as the market opens. Don't jump into the market. There are certain times, certain sessions, you need to prepare to join the market trend. We can see that we have an overall trend of a downtrend. Yes, it is a strong downtrend. Let us look out and watch out for market to give us a sell structure, a break of structure, and a return to origin on a smaller time frame before we enter the trade. The next pair on our list for today is the Australian dollar against the United States dollar, and we have the same market structure on the Australian dollar against the United States dollar. And over here, the 4 hours order block and validation point have been marked. We're expecting the market to still go into this point, and within this point, we're looking for our sell positions, and we're expecting price to go below this low, below this low, below this low, and also come down to this daily bullish order block. Daily bullish order block. That's what we're expecting price to come down to. The next pair on our list is gold. The next pair on our list is gold, and also gold has the same structure with the market. I can remember on last week's forecast, we were expecting a buy at this point. We're expecting a buy at this point, and I told you guys that we should expect that buy because we have a spiritual candle. With the help of candlestick mathematics, we joined one, two, three, four red candles to form one candle, and we have what? An engulfing candle over here. And we also marked out this point over here as our buy setup watch out. So on Thursday, the market was at this point, and we saw a very good buy setup, and we took it to the upside. We made profits on Thursday. If you dive down to the comment section below, you can see the link to our Telegram group. You can join our Telegram group so that you never miss these opportunities as we place this trade together. Most of my VIP students, we took these trades together. We made great profits. So you guys should grab this opportunity and utilize it. Then over here, we see that market came back to these 4 hours validation point and OB. That was where we had news about the Fed on Friday, and we had this massive spike to the upside into this 4 hours order block and validation point for a bearish sell setup. So this is what we're expecting on gold. Then next on our list is the oil. Oil is very important because the generation of the industrial generation was built on oil. I'm breaking down a very, very important information. The industrial generation was built on oil, and this oil made a lot of billionaires and millionaires in the market. So gradually the economy is changing, but oil still runs the world. Listen, the industrial economy is changing to the attention economy, but oil still runs the world. So what do I mean by industrial economy, and what do I mean by attention economy? By the industrial economy, we mean that most of the events, most of the activities, and most of the programs we have in life needs one or two aspects of oil to be accomplished and completed, which is like electricity, transportation, manufacturing, and so on and so forth. So OPEC cut the amount of barrels of oil that is being produced or supplied in a day. They cut the amount, and this cost bidding to be able to start using the reserves they have in the United States of America. Meanwhile, Saudi Arabia, which has to do with OPEC, and other countries like Egypt, has formed a region, has formed a union, and they are against the dollar. So a lot of the oil used in the United States of America now is from the United States reserve. And from what the OPEC council has done by cutting a lot of barrels, this we can see that when you have limited supply, there is increase in price. That's why we're expecting the price of dollar to oil to increase to $100. And over here, we can see that we had a massive push to the upside, which we said that this price will push up from here at the price of $79.56 per barrel. Up to this point, it went up to $93.46 per barrel, and it corrected. There was a retracement. So over here, we are seeing that a lot of the market makers don't really want us to go in on this buy with them. So all this year, they're trying to make fewer people to miss out, or make fewer people to not join the market trend, while they are trying to push the market up to the $100 mark. So this is very, very important. As oil is increasing in prices, inflation is increased, and if inflation is increased, the Fed, which is meant to be the decision makers controlling the inflation policy in the United States of America and in the world, would have to panic a lot, and there will be a lot of tension in the economy. When there's a lot of tension in the economy, there's a lot of what? Depression. So that is what we're trying to break down with the oil price. The oil price and the industrial economy is still intact in most part of the world, but we are gradually transiting from the industrial economy to the attention economy. If you would like to know more about that, join our social media handle on WhatsApp, on Facebook, on Instagram, on LinkedIn. We'll be able to drop that content on there on with a video on our rise and grind sessions every Wednesday. So don't miss out this coming Wednesday rise and grind session. So the next on our list is Bitcoin. Bitcoin is the last on our list, and currently on the Bitcoin market, we can see a lot of noise going on here, and this is a lot of ranging. I'm really impressed. Digital currency like Bitcoin was able to sustain value, why a lot of stocks, a lot of index funds, a lot of assets were losing value. But Bitcoin, which is the digital currency that is not seen, that is digitally monetized, sustained value between the range of $20,379 and $18,456, which has been ranging. And from here on, we are looking out for a break to the upside and then a continuation to the upside. We have a buy bias. But if this bias doesn't work out, because we have what? A wedge here, a descending wedge. And most times, descending wedge used to work the opposite way, and it's calculated with the help of the volume oscillator over here, the volume oscillator. What I mean by this, why I'm sharing more information about this, is because you guys have been liking, commenting, following our Instagram, viewing our content. I really, really, really appreciate the way you guys are so responsible in our community, sharing value and assisting each other. I'm really impressed. So that's why I'll give you guys more breakdown about this. So for you to be able to make a good decision when you're trading with the volume oscillator, you need to find these points where they have higher highs, and this is where we have higher highs on this volume oscillator at this point. So from the volume oscillator, we can see that over here where we have a higher high, the market was high, and over here where we had a spike into this point, we had a bullish volume plunged. And also over here, we can see that we have another bullish volume plunge. So when the market creates lows, there is massive volume being pumped into the market to sustain the market. And from there, we can see that the price of BTC would go up higher. So let's watch out and see how the market turns out. Thank you so much for coming on today's Forex forecast. So to get us prepared for next week, we need to check the economic calendar. The economic calendar will determine the days when this liquidity will be pumped into the financial market, the forex market, that will help us to determine the direction the price is going to go and the actual pairs we need to focus on. That is why we are diving into the economic financial calendar. So it's currently loading. From the economic calendar, we can see that Sunday, being the 23rd of October, by exactly 11 a.m. West African time, the Australian have a S&P Global Manufacturing PMI. So it's an index news, and it determines the strength of the Australian currency. And from here, I can see that the Australian currency will be weak based on the consensus, but the actual news has not been known. So on Sunday, we have the Australian news. On Monday, we focus on the euro against the dollar pair. On Tuesday, the same with the euro against the dollar pair. And on Wednesday, we focus on Australia against the dollar pair. Let's see if we have more news. While on Thursday, we focus on both the euro against the dollar pair And on Friday, we focus also against the euro and dollar pair. There's a lot of news going on euro and dollar this week. One thing I know for sure is that the euro is currently in a bad shape, and heading into winter, they need oil supply from Russia, and with the conflict going on, there is going to be limited supply of oil from Russia to Euro, which is putting Euro in a very bad condition. So that's why we have a strong bias and strong view that the Euro against the dollar will be selling and shorting. Thank you so much for being on today's Forex forecast and trading forecast. We hope that you got value. If you did get value, go to the comment section, type value, 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 like, share, and do have a wonderful trading week.